So it's not that Bitcoin necessarily gets better. It just is. It's that the currency keeps getting worse. But here's the
Hey guys, welcome back to Everyday Finance. In this video, Yusko discusses Bitcoin and crypto. According to Yusko, the narrative surrounding Bitcoin has a tendency to shift when you trace it all the way back. When he discovered it, he realized it was a peer-to-peer electronic cash system, so we're considering making a purchase. Order some pizzas with it. Alright, so this individual did something but then had the audacity to call someone else an idiot. Quite uncalled for, he must say. We should all express gratitude and show reverence to him, as he demonstrated the potential of this concept to facilitate value exchange without from being regarded as a trusted third party. It transitioned from an awesome and amazing concept to one focused solely on digital goals. Alright, well, gold seems to be a protection against inflation. And so these individuals mentioned that if it's considered a valuable asset and has superior qualities, Yusko would likely invest in it. It's convenient, and there's no need to physically store or transport bulky gold bars. Yusko also acknowledges the digital nature of it. Rare, akin to gold, and seen as the foundation of the future's monetary system, gold has served as a monetary base for thousands of years, indicating that central banks also hold significant amounts of gold. They start at the foundational level and then build upon it by creating currency. Money is an asset that exists independently of any liabilities. It's like a valuable commodity. At times it was silver or other similar assets, but ultimately there are few things that hold value without a liability. Currency conversion. All euros are supported by debt, which means they carry a liability. There is an associated liability, which means they don't function in the same way as traditional currency. This is something he is considering. Regarding the digital gold argument, it's worth noting that there is a significant amount of gold in circulation, with half of it being used for jewelry purposes. Artifacts, chalices. You're familiar with the gold leaf on the Golden Dome, where he attended school, and all the other impressive details that come with it. That's the commodity part, and gold was the one thing that for years held significant value. Both commodities, which serve as a hedge against inflation, and currencies, such as money, contributed to the presence of the Bitcoin narrative, and lots of things Yusko discussed. So please watch the video to end, and share this video, and subscribe our channel Everyday Finance. Thanks.
to unpack. First, I think the narrative around Bitcoin tends to shift, right? You go all the way back to the founding. It was a peer-to-peer electronic cash. So we're going to buy pizzas with it. Okay. The guy did. But he says, oh, you're an idiot. No, we should all thank him and bow down because he proved that this thing could allow us to exchange value without a trusted third party. Awesome. Amazing. But it went from that narrative to, oh, it's digital gold. Okay, fine. And gold is an inflation hedge. And so these people say, well, if it's digital gold and it's better, I'm going to buy it because it's easy and I don't have to store it and I have to carry around these big gold bars with me. Okay, fine. But I agree that it's digital, it's scarce like gold. And I believe it's the monetary base for the future, right? Gold's been the monetary base for 5,000 years. And what I mean by that is all the central banks own gold, right? It sits at the base level, and then they create currency on top of that, right? Money is an asset that exists in the absence of a liability. That's been gold. Sometimes it was silver and sometimes it was a few other things. But bottom line, there aren't that many things that exist in the absence of a liability. Currency, dollars, yen, euros, all are backed by debt. They have a liability, associated liability. So they're not money the way we think of money. So I think of the digital gold argument as the monetary piece. Like there's 12 trillion-ish of gold. Half of that is jewelry, artifacts, chalices, gold leaf on the Golden Dome where I went to school, all that good stuff. That doesn't count. That's the commodity part. And gold was the one thing that for years was both commodity, which is kind of an inflation hedge, and currency, right? It was money. And so that Bitcoin narrative was there. But now I like the narrative that Saylor put out there the other day, that it's really digital property, right? It's property rights. And that means it's much, much bigger. And I keep talking about the fact that in the QE era, right, when money supply was expanding, the price of Bitcoin, quote unquote, went up because we measured it in the thing that was devaluing. And this is the part, right? My sign over there, right? One Bitcoin is one Bitcoin. Will always be one Bitcoin. But you and I might, or Jason and I, we might, but the average person doesn't talk in Bitcoin terms. Mm-hmm. They talk in dollar terms or yen terms or Bolivar terms. But if you lived in Venezuela, there really has never been much of a bear market in Bitcoin because the Bolivar was going down so fast, or Turkey with the lira. So it's not that Bitcoin necessarily gets better. It just is. It's that the currency keeps getting worse. But here's the thing. The last year, M2 went down in the United States. Only twice in 100 years has that happened. And it happened in the last year. Well, wait a second. Then Bitcoin prices should have gone down. If we're restricting the dollar, right? We're not creating as many dollars, then Bitcoin price should have gone up. But Bitcoin prices went up 200%. Well, what happened? Supply and demand. And this is where the differences come in, that you can have a change in value of an asset because the currency you value it in is changing. I always talk about my house, right? According to Zillow, my house went up 50% here in Chapel Hill over the last 2 years. That's ridiculous. That's ridiculous. My house did not grow. My house didn't get more efficient. I actually had to put money into it to stop it from going, wearing out. The money got worse.
According to Mark Yusko, Bitcoin inevitably improves. Simply put, the money is always getting even worse. But here's the thing. M2 declined in the US last year. That has only occurred twice in 100 years, and it did so in the past year. Hold on, just a moment. Prices for Bitcoin ought to have decreased if we were really restraining the dollar. Not only have we not been producing as much money as we should have, but the price of Bitcoin has increased by 200% as a result of supply and demand, and this is where the variations occur. An asset's value may fluctuate if the currency in which it is valued changes. Let's back to the Mark Yusko interview.
It's great. Great question. So when do we become on a Bitcoin standard? I think it's actually a long time away. And the reason is as much as I believe in Bitcoin being better money, I actually don't think anytime soon the nation states are going to abdicate their right to control their particular money. Right. And look, I don't know if you've ever had Murray Stahl on the podcast. You should have him on. And he makes us look bearish. Like, how is that even possible? Right. But he makes us look bearish because I talk about this all the time. To me, Bitcoin displacing gold as the base layer of money, easy. $6 trillion market cap. That's like you can bank on that. That's totally easy. The next step, which is where the good money crowds out all the other money, and we start talking about, to your point, not Bitcoin in dollars or Bitcoin in yen or Bitcoin in euros, but euros in Bitcoin or dollars in Bitcoin, because it is the standard. There's a book called the Bitcoin Standard, right? But that's inverse to Gresham's law. Gresham's law says the opposite, that bad money always crowds out good, right? Gold is good money, but other paper money always crowds that out. People want to use the bad money because I don't even understand the exact reason for Gresham's law, but it's a law, right? And if you look at history, that's what happens: is people flock to the worst currency at the worst possible time, and that's why you get the hyperinflations eventually, Zimbabwe and Argentina and Turkey. So what Murray says is we're going to get a reverse Gresham's law. And this good money, this Bitcoin, is going to eat all global currency, which today is about 86, 87 trillion. Oh, just round it to 90 or round it to 100. Doesn't even really matter. Trillion here, trillion there. Pretty soon you're talking real money. That one's harder for me because I think we've seen how hard people are fighting just on the little stuff. As Bitcoin starts to siphon money out of the banks, right? We all experienced that with, we saw the lenders pop up and people took their fiat, converted it to stable coins or Bitcoin and got paid interest in a zero interest rate world, which was unnatural. And the banks were like, 10 billion, who cares? 100 billion? Now we got a freaking problem. Now we're going to make it, illegal or unethical and we're going to put people in jail. And there's still people in jail for writing code. It just boggles my mind. So I think it's a long-winded way of saying, I think they're going to fight it really hard for a long time. And the smartest people are going to get that, and they're going to increase their exposure. I mean, look, you and I have been talking about this for a long time. Get off zero, right? Zero has always been the wrong number. How big that number is in your portfolio, that's a debate.
Mark Yusko believes it will be a long time coming because despite his belief that Bitcoin is a better form of money, he doesn't think it will happen anytime soon. The nation-states will soon give up their authority to manage their specific money, correct? Additionally, if Murray has ever stalled on the podcast, you ought to have him. Yusko goes on to explain that he makes us appear pessimistic. But how is that even possible? Yes, but the fact that Mark Yusko talks about this constantly makes us appear pessimistic to him. Gold is being replaced by Bitcoin as the medium of exchange, with a $6 trillion market valuation. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.